Members everywhere. Adam Hewison here, president of INO.com and co-creator of MarketClub with your video market update for Wednesday, the 17th of April. Well, the twin elements of fear and uncertainty have entered the markets. That happened on Monday. And we talked about this Black Swan event, and I think that took place on Monday with the bombing of the Boston Marathon. Not a good event. We've got some very clear lines to draw, so let's get started right away with our portfolio. So here we are. We're going to be looking at gold. We'll also be looking at Yahoo and the Bank of America that reported earnings today that were a little bit disappointing for the streets. So you can see they're both down, but we'll give you our ideas on what to do with both of these stocks today. So let's go right to a chart of the gold. And as you see, gold has clearly come down. Now what I want to do with gold is put in our Fibonacci numbers. And it's easy to do. Just click here and you see a little yellow box goes here. And this is the way we measure the tool. Very prominent university professor came out and said gold could be down to $800. That's the nominal value. But I think we're looking closer to the 1155, 1160 area. 1164 is actually on a close-only basis. But if we go on a higher basis, you can just move this up a little bit here and then down a little bit here. So it gives you the 1156 level. So I think around the 1160 area, that's the target zone. We've already hit close to the 1300 level. Yesterday we traded down to I think 13. Let me just see here. Now I think it's 1318 was the low, but I think we can still go lower in this. It's not over yet in this market by a long shot. So let's see what happens. We've broken some very key trend lines, and let's go to our next market in the pile, and that's going to be crude oil. And crude oil, you can see there again, the key level we're looking at in this market is the 80 level, and that draws right across this level right here. Look at how much support this market has had at 80, just right there. So I think if it gets down to there, and I think it's a good place for it to get to, I think we could see this market even move still lower down to 80. So we're currently trading 88.10. We have a monthly, we have all of our trade triangles are negative, so I can see this market moving still lower. On the industrials, let's take a look at this market because this is interesting to look at. We're plus 75, trend is still intact, but look at let's get real close here, the last 3 months. And you can see there's the big down day Monday, little recovery on Tuesday, and here we are Wednesday back down now. The key level there on the Dow is 14,598. So we're only 25 points away from there. If we close below this level here, the low seen on Monday, that is not going to be a good sign. We've turned down in the MACD. I'll just scope that down so you can see that. So there's the MACD just turned down. Not a good sign. And again, I think the fear and uncertainty in this market is beginning to build. And I think people who have had some nice profits in this market probably want to take it off the table. So let's see how we close out the day and this week. But definitely the level I want to watch in this market is 14,598 for the week. So let's move on to our next market. This is the S&P 500 cash. Much the same picture there. The key level there on the S&P is 1,552, which is the low right here. If we go and close below that level, I think that would be a negative for the market. We've turned it down already in the MACD. You can see it right there. There's the switch down, and that is not a good sign. So again, we think these markets can be on the defensive based on just on the fear principle of what's happened in these markets in the last 72 hours. Much the same with the NASDAQ. The NASDAQ level we're looking at there is 3,213. It's 3,214. We've been as low as 11, so I would say that if we close down here, then that's toast. We are basically, as you know, we like being long the S&P, short the NASDAQ, and that's worked out well for us. Plus 55, it's a trading range. The trend is still to the upside longer term, but for the moment, we could see this market coming down under pressure, particularly if it closes below the level I just mentioned, the 3,213. So let's just see how that plays out. Next market's the Eurodollar. Big move up in the Eurodollar. Now here's the Eurodollar is interesting. If you just put our Fibonacci in here, and we'll do that quite easily from the highs here, scope this down to the lows. Certainly we have got very close, 32.20 is a 50% correction from the entire move, which is not unusual. And 33.41 is a 61.8% correction. I think we're getting very close to both of those levels before we start correcting in this market. So that's not necessarily good news for the dollar. So let's move on to our stock of the day. As Yahoo reported their earnings, a little miss on their advertising earnings, they said, but this stock still looks very, very good to us, and here's the reason why. Let's scope this out just a bit. What we like about this stock, you can see a nice base right here, a nice big base. There's our monthly that kicked in right here. It kicked in at 1637 or 2390, so it's another great signal from us. The last weekly was 2031, so it's 2390, so another good signal. So again, this is a nice base for this market to go higher. I could see this market going up to the 28 to 30 level based on the history. If we go to max, you can see this market's had actually much higher levels. But certainly the 28 to 30 level is where it's going to run into some resistance. That's our guesstimate. Now, the other reporting company was Bank of America, missed on their earnings. You can see here it's slightly, each high is slightly lower. And if we scope this in real closely, the key level I want to watch here is this level right here. If we close below the low seen this day, which is 1164 or 1179 right now, I would say it's probably toast for this market, at least for the time being. On the MACD, we're still seeing this market lower. You can see right here, and that still looks soft to us. The interesting thing about this is if you look at this market, we had a signal at 1191 to exit this position, which we did, and we're on the sidelines. When you have two triangles in different directions like we're seeing now, that's basically be on the sidelines. Don't be in the market right now. So let's see how this plays out. But I'm Adam Hewison for Market Club. Thanks for stopping by. Every success with your trading today. I'll see you later.